I think we'll get started. I'm just conscious of a Friday afternoon and a sunny one at that, so don't want to delay you for too long. First of all, my name is Emer Joyce. I'm a tax director with Grant Thornton, and since the commencement of the TWSS scheme in March, I've been working very closely with our client base and indeed with Revenue on the various updates and changes to that scheme. And obviously now with moving into the EWSS, similarly quite involved with that. So I'd just like to welcome you all here this afternoon, and as I said, thank you so much for joining us on such a gorgeous afternoon. I hope it's as nice where you are as it is where I am. I'd also like to thank most sincerely our colleagues in the Revenue, Rose Murphy and Delay, Karen Byrne and Laura Glancy, who have joined us this afternoon, because they have a lot of insights, obviously, from a revenue perspective on both the temporary wage subsidy and the proposals around the new scheme. So without further ado, I'm going to pass you across to Karen. She will firstly take us through updates on the TWSS as they stand currently, and I will then brief you on the available detail we have on the EWSS. So without further ado, I'll pass you to Karen. Thank you.
Thanks very much, Emer. I hope you can hear me there, yeah. So again, thank you everyone and welcome for joining us today. And again, thanks to Emer and her colleagues in Grant Thornton for allowing us to speak to your members here today. It's a great platform for us to be able to discuss these topics during the COVID pandemic when we're all at home on lockdown and as such. I'll walk you through a brief overview again of the temporary wage subsidy scheme and just some reminders around the eligibility criteria and that as we have moved on into August. And again, some of those operational aspects that will still continue on even when the scheme closes on the 31st of August. And then, as Emer said, she'll talk you through some more of those key points around the employment wage subsidy scheme that will be coming at us. So just again, moving into that overview of the temporary wage subsidy scheme to remind everyone, I'm sure everyone is aware of these key points of it, but the scheme was announced under Section 28 of the Emergency Measures in the Public Interest Act on the 24th of March, and it was to provide financial support to employers affected by the COVID-19 pandemic. The scheme has now been extended to the 31st of August as announced by the Minister for Finance. And the overall aim, I suppose, was to maximise that staff retention and viability of the employer's business by maintaining that employer-employee link and through the crisis. As with all initiatives, Revenue have taken a fair, reasonable and pragmatic approach to the implementation of this scheme. And a list of all employers that participated in the scheme will be published on the Revenue website at the end of the scheme. And that's just a fairly standard approach at this point. And it's also to aid transparency between the employers and the employees that the scheme has been implemented and operated correctly and as intended. Revenue has expected a presumption of honesty from all participants, with the scheme being based on those self-assessment principles and a self-declaration from the employer regarding the negative impact on the crisis on their business. That declaration has since closed on the 31st of July, so no new employers have been able to register or sign that declaration for the TWSS since the 31st of July. And just to give you a few stats around the temporary wage subsidy scheme, we published our latest figures on our website yesterday, and we're looking at around 69,500 employers registered for TWSS, with around 65,500 receiving payments, and that's in relation to 647,000 or just over 647,000 employees availing of support under the TWSS. And you're talking figures of paying out amounts of in around 2.43 billion, and that includes tax refunds of 151 million. So substantial figures that we're talking there we have seen through the course of the temporary wage subsidy scheme. Excuse me. So the eligibility. So again, there's a full criteria and eligibility document available on our website, revenue.ie, and that's important to note coming forward. If you are subject to a compliance or assurance check under the TWSS for eligibility, a list of those supporting documents that will be required are listed out under that eligibility criteria document. The scheme was open or available to employers across all sectors, excluding those in the public service and non-commercial semi-state sector, and the business must have been experiencing significant negative economic disruption due to the COVID-19 pandemic. The employer must have demonstrated a minimum of 25% reduction in turnover in Q2 2020. And we've always said that the employers themselves are best placed to determine this and base that judgment on either the decline in customer orders or in turnover or any other reasonable basis that they saw fit for applying for the scheme. Some of those cases, of course, were quite obvious where business has closed, and we could see the impact of the pandemic on those businesses, or in the case of a retail or the hospitality sector, the reduction in bookings or the reduction in cash or credit sale orders could have been taken for that reasonable basis for experiencing an impact from the pandemic. Some cases were less obvious, and we may need to have a look further at those cases. But again, as we move beyond that Q2 period now into August and trade is recommencing, hopefully across all sectors, it is important that employers who are still implementing the TWSS continue to monitor that eligibility criteria and assess if they remain unable to meet the normal wage or payroll outputs that were expected. Again, that key benchmark as we move into this period is still on that Q2 2020 turnover, or the suffering of a minimum of 25% reduction in turnover or customer orders, be that as it may. But again, as business improves, and we are expecting to see that as employers become more able to afford those wages and payroll outputs, that the subsidy amounts should start to taper off coming this month towards the end of the scheme. There was also a requirement that the firm had, or that the employer had a firm intention to continue to employ the specified employee, and all employers who implemented the scheme should retain evidence and supporting documents for those future compliance or verification checks that I mentioned there, and again they're set out in that eligibility document. I'll talk you through our compliance check program also on one of the slides coming up. The eligibility for the employee, then the employee was someone who their employer could not afford to pay or fully pay during the crisis, and they must have been on the employer's payroll on the 29th of February, with pay and tax details being reported to revenue in those qualifying payroll submissions, and that they were being kept on the employer's payroll. If employees were laid off and were rehired after the 29th of February, those rehired employees, if they were on the payroll at the end of February, then they too were also deemed eligible employees. So some of the more recent announcements that were made in relation to the scheme in terms of those maternity, paternity, adoptive or related unpaid leave, the apprentices. I'll give you a very brief overview of the employment wage subsidy scheme, and then Emer will talk you through the more finer points or key points. A little bit about rehiring, as we are still continuing the TWSS. Around that compliance checks, non-cumulative week one basis, end of year review for the employee and reconciliation, and how employers can stop operating the scheme. So just some detail around these areas. So that maternity, adoptive, paternity or related unpaid leave, or where employees were in receipt of certain DASP benefits such as health and safety benefit or illness benefit during that January-February payroll period. These employees, we found that were returning to work during the course of the pandemic, or you know, in the last couple of months, June, July, August. An employee who had returned to work after a period of that leave or were in receipt of those benefits may have either been paid by their employer, which could include an element of a benefit, or they were in receipt of a full benefit directly from DASP, or they were in receipt of neither a benefit nor payment from their employer, as they were on unpaid leave in those periods. In those last two scenarios, the employees would not have been included in the January or February payrolls for their employer. And that's important, as we know, back to the calculation of the average revenue net weekly pay, which was the basis for the subsidy amounts that were paid to employers or employees. And even those employees who were paid by their employer might have been on the payroll for January and February. That pay might have been suppressed because they were in receipt of certain DSP benefits. And as a result, the subsidy for those employees might not have been optimised. So this change was brought in and announced by the Minister. Sorry, I'm just getting a message there. The sound might be too low. I'll just open my volume there a little bit. I hope that helps. And so these employees, there was a process put in place for these certain employees where the employer, and if you are an employer and you still have these certain employees returning and you haven't contacted revenue, then there is this process to follow. So the employer will notify revenue through the ROSMA inquiries facility with those details of those relevant employees. A revenue caseworker will take that information and will work through the subsidy amounts and generate a CSV file for the employer and notify the employer that that CSV file is there waiting for them to upload the information into their payroll system, and then they can continue to operate the subsidy as normal. So it's just a simple process for them. The cases are worked manually by revenue caseworkers and the payments then are backdated. And similar process applies for those apprentices who again may not have been on their employer's payroll in the February 2020 period, as they could have been on a training program run by SOLAS and were not on their main employer's payroll. Excuse me. So for those apprentices returning to work, the scheme could have been applied retrospectively to either the date of employment, the date the employer joined the scheme, or from the 26th of March, whichever date was the latest. And again, those dates apply back to those maternity, paternity cases also. If apprentices had been ceased from the payroll and in receipt of a pandemic unemployment payment, then no retrospection of the temporary wage subsidy applies. And again, that is the case with the maternity cases. However, those employees could be rehired by their employers and continue to operate the subsidy in their pay. So they're just very simple changes that were made, just to be aware of. Again, if you have employees in those circumstances, that you need to inform revenue before the 31st of August. The July stimulus announcement then that was made by the Minister on the 23rd of July. As I said, Emer will bring you through this in more detail, but essentially just a reminder that the temporary wage subsidy is expiring on the 31st of August. And since the 31st of July, no new employer could join the TWSS, but current employers can still continue to operate the temporary wage subsidy until that date on the 31st of August. The EWSS then will operate from the 1st of September and continue to run until the 31st of March. However, both schemes will run parallel from the 1st of July until the TWSS ceases at the end of August. Obviously, legislation arrangements came into play with the bill being signed by the President on the 1st of August, but we are currently developing our guidance material, which will set out in more detail that eligibility criteria and the operating procedures for the new EWSS. Employers who are not eligible for the temporary wage subsidy or who had employees that were not eligible for temporary wage subsidy can claim the EWSS in respect of these employees from the 1st of July, and that will be dealt with as part of a sweepback mechanism. But again, that's still under development from our side of things, and there will be payment once we get that mechanism in place. Payment will be made during September for those employees. The reduced rate of PRSI will continue at 0.5%. And as I said, we're currently developing mechanisms, and the registration for that facility for the EWSS scheme is hoped to be operational by mid-August. And just on the seasonal and seasonal workers and rehires, eligible employers can again backdate a claim to the 1st of July for EWSS payments in respect of new hires and seasonal workers, subject to limited exceptions, and they will be contained within our guidance material when we publish. But again, payments will be expected to be made by revenue in mid-September, and then payments for subsequent periods will be made monthly in arrears thereafter that. So rehiring, so we're back onto the TWSS here. We're rehiring, and again, you know, we are still operating the TWSS, and employers may still be rehiring employees on that scheme. So where those employers were temporarily laid off or ceased during the COVID pandemic and their employer has wished to place them back onto the payroll, there is a procedure set out in our employer FAQ guidance document on the website, and it just outlines that there may be some issues around operating the active employment ID. So where these rehires are happening, the employer can create a new employment with the same PPSN, but a new employment ID. And as I said, we have seen issues around those active and eligible employment IDs. So if you find yourself in those scenarios, have a look back at our FAQ document. There is a step-by-step process set out there of how to operate these rehires, and if you're finding issues with those active and eligible employment IDs. For pay frequencies on these rehires, if they're other than weekly, the employer should consider placing them back on a weekly pay, just to simplify that alignment with the temporary wage subsidy, but to also prevent any pandemic unemployment payment overlaps that may trigger an overpayment situation for the employee, and then they will be responsible for repaying the ESP. So just to simplify that alignment, it's advisable to put them back on a weekly pay. The employer CSV file is refreshed daily and includes the employee information for those rehired employees having been notified to revenue. And again, the employer will receive a notification as to when that CSV file is ready for upload. But to be included in that refresh, the employer must ensure that the rehired employees on the payroll and the RPN has been received the day before the employer calculates and submits the first payroll payment to revenue for those specific rehired employees. So the compliance checks then, we have implemented a compliance check program for the temporary wage subsidy scheme, and it's to all employers who have availed of the scheme at any stage during the last 4 months, so since it started the 24th of March, not just those that are currently availing of it. And letters are issuing to employers and their agents where relevant, mainly through that My Inquiries or ROS inbox, And we are working in batches through these cases. So they didn't all just go out at once. We are working our way in batches through the cases. So if you haven't received anything yet, just keep an eye on that, that My Inquiries inbox for any letters that may come in. And it is essential that the employers respond promptly to those letters. There is a turnaround time required on them, and just respond, even if it's the case that you're finding you don't have sufficient time to gather the documents that have been requested. Do respond to your caseworker and just let them know that you are gathering that information, and just liaise with them. Keep that open communication with the caseworker. The letters and the checks are just to confirm that the employer has met the eligibility criteria. You'll probably be asked for details of the business activities, the negative impact of the crisis on the business. So the date, if the business was closed, you'll be asked for the date of closure or the date of disruption to the business. And, if unable to pay the normal wages or outgoings, just to provide some financial information or financial details to support those assertions that were made in relation to the 25% turnover test. You may also be asked for a sample of some payslips, of some employee payslips, just to support any subsidy amounts that were paid. The compliance check itself is not part of a revenue audit or intervention. It's simply a request for information to provide assurance that the scheme has been operated as was intended by the employers. But information must be, as I said, provided within that set time frame unless you make arrangements with your caseworker. If you don't respond at all, you are at risk, or the employer is at risk of exclusion from the scheme, and from the TWSS refunds may not issue until that documentation is provided. The compliance check program will also address any issues identified in respect of the operation of the real-time PAYE or PMOD by employers during the 2019 or 2020 period, and will provide an opportunity for employers to address any other outstanding tax issues. This will be of importance to employers who may intend to avail. Sorry, are we okay there? We're getting a bit of interference on the mic. Are we all right? Everyone hear me? Yeah, okay. It will be important to employers who may intend to avail of the debt warehousing arrangement, the debt warehousing scheme, for that employer PAYE and VAT liabilities incurred during the pandemic period. So up-to-date compliance will be a prerequisite in order to avail of that debt warehousing scheme. So it will provide a sound basis for that arrangement. To date, under the compliance check program, we have received a very positive response, with over 10,000, or I think maybe nearly 13,000 employers having been contacted to date. Most employers have responded very well within the required time, and some have even been ready with their documentation to return straight away and providing that requested information. And now I've been told we're moving into the larger clients, or the complex clients. So if you haven't received that letter, do keep an eye on the My Inquiries inbox. So moving into the non-cumulative week 1 basis, and I suppose this is important still for those implementing the TWSS, because as it will, the week 1 will continue to the end of the year. So the temporary wage subsidy payments are liable to income tax and USC, and the pandemic unemployment, or the PUP, is liable to income tax. However, they were not being taxed in real time through the Life PAYE system, and instead will be liable by way of an end of year review for the employee. So with the announcement and the continuation of the TWSS to the end of August, in order to minimise any hardship or tax owing on the employee, Revenue placed all employees in receipt of TWSS or PUP on a non-cumulative week 1 basis from the 21st of June. So updated revenue payroll notifications, or RPNs, were sent to employers at this time, reflecting the week 1 basis for those employees availing of the temporary wage subsidy. Reverting to a cumulative basis does require contact to revenue, and you can make contact, but only in very exceptional circumstances will an employee be taken off the week 1 basis if they have been in receipt of the TWSS or week 1. And this is just to minimise that hardship for the end of year review. I suppose that's the advantage of staying on the week 1, is that you are taxed correctly each week, and will minimise that effect on the end of year review. Any employees who were not previously on TWSS and will be joining on the EWSS scheme, so the Employment Wage Subsidy scheme, from the 1st of September, will be taxed in that live environment. So the end of year review brings us in nicely to that. So again, those subsidy payments are not taxable in the live environment, but as I said, will be subject to tax by way of an end of year review. It's normal revenue practice that when a review is carried out and there is a liability, or liability arises, revenue will collect those amounts owing in manageable amounts, and that's normally done by reducing an individual's tax credits for future year or years. And if this is the case for the employee, those tax credits will be reduced from the year 2022. So we're not looking at recouping that in 2021. It'll be 2022 before those tax credits are reduced. Additionally, if an employee has other tax credits like health expenses that they wish to claim, they can also claim them at the end of the year against any liability that might be arising. So how does an employer stop operating the scheme? Now, again, we're considering and working on developing a systematic requirements for closing out the TWSS at the moment, and how this will happen for employers. But essentially, if an employer finds that they're no longer meeting the eligibility criteria, or they just wish to stop operating the temporary wage subsidy scheme, then they just stop making those J9 payroll submissions to revenue. We will issue notices and guidance where required around this exiting or closing out of the TWSS closer to the end of August, and what's coming next, basically, as we move on into the reconciliation phase. But as I said, if an employer did not meet that eligibility criteria, just cease submitting those J9 payrolls. It is important, however, that if they are reverting back to the normal payroll process, taking employees off a J9 PRSI class, to return their employees back to their normal and correct PRSI class that they were on before implementing the temporary wage subsidy scheme. And the employer should retain all evidence and supporting documents in relation to any subsidy payments made, any refunds received from revenue, and also information around the tax refunds that they may have received on behalf of their employee, as revenue did refund those amounts back to employers also. So that will move us into the reconciliation phase. So all of that supporting documentation and evidence will be used to provide revenue with information about the subsidy amount that was paid by the employer and received, and we will reconcile all of those figures. As you're probably aware, when the original employer refund scheme was launched back in March, we were paying a flat amount of €203 per employee, and then we moved into the transitional phase of the temporary wage subsidy scheme. Revenue refunded an amount of €410 per employee, regardless of what was paid to the employee at the time. So there will be a variance in the amounts there, and we did ask at the time that employers retain any of those excess credits or excess amounts for the purpose of reconciliation. So there is a reconciliation required on especially those employers who have been implementing the scheme from those early days. So it's just important, and an element of this reconciliation scheme will be through a CSV file. So if you have been operating the scheme, you will be familiar with those CSV files. It's important to mention as well, as we did ask back in the early days, if you were holding excess refunds or you wanted to make a repayment, if you knew how much you had been overpaid, if the employer wanted to make a repayment, they could have done so through an EFT facility, and we provided bank details for that. We have moved away from that facility now, and we are operating a Rev Pay facility. So if you find that you wish to make a refund of temporary wage subsidy, please use the Rev Pay facility now, and ensure that only amounts of temporary wage subsidy are included and are repaid in that. Any amount of income tax and USC should be separately paid under the PAYE EMP employer tax head to correctly reflect that balance in the PAYE EMP tax head. We have instructions about that Rev Pay facility and how to use it. They are set out. We have a dedicated web page to it at the moment under the COVID-19 banner for the TWSS, and it's also in our employer FAQ guidance material. So just a very quick and brief overview on that CSV file. I have mentioned it several times throughout the course of the presentation, and if you're not aware of it, if you have been implementing the temporary wage subsidy, you should certainly be aware of it, but it's just a comma separated values file. It contains a list of data. It's like a spreadsheet for exchanging information between different applications, and the purpose of it really was, when we moved from that transitional phase into the operational phase from the 4th of May, Revenue were providing all of that information in relation to employees' subsidy amounts. So the ARNWP, the maximum weekly wage subsidy figure, and the maximum weekly employer pay before tapering figures were all encased in that CSV file and was available for download and then upload back into Revenue for the employer. Software providers, then certain software providers may have needed to import additional information from the software systems, but if an employer has not used the CSV file, it's very important that you do download the latest version of it and use it if you're still implementing the TWSS, as they are at risk of either not operating the scheme correctly or within the guidance that was set out, but also they will not reflect the correct subsidy amounts or the refunds that have been received. And particularly, again, as we move into this reconciliation phase, the calculations that Revenue sent out in regards to the employee subsidy amounts will be in those CSV files. So the reconciliation amounts will be based on the subsidy paid, subsidy payable, and refunded back to the employer. So again, it's very important, as you may not receive refunds that you were expecting, or you may end up with an overpayment following the reconciliation phase that you may not be expecting. So I'm going to hand you over, sorry, that's just a brief FAQ and guidance material and links that we have. As I said, that employer FAQ guidance document is available on our website. We have employee guidance also published, and we will update the website very regularly, especially now with the new EWSS information coming. Once we publish that guidance, it will be available on our website. So thank you very much. I hope it was helpful, and I'll hand you over to Emer now to discuss the key points on the EWSS scheme.
Thanks, Karen. It was a great recap for everybody on the call. Just to say, we will be circulating the slides and we're also recording the session, so no need to be taking notes as you go along, and obviously happy to take questions at the end, as Valerie mentioned at the start. So just looking at the EWSS, as Karen has already mentioned, we're still waiting on revenue guidance to commence the scheme operation, and as Karen already mentioned as well, it was introduced as part of the July stimulus package on the 23rd of July. So it's going to be available from the 1st July 2020 until the end of March 2021, and until the 31st of August we'll be running concurrently with the TWSS, and the TWSS then to cease from the 1st of September. I suppose the one welcome thing with the new scheme is that new hires can be included in the scheme, and I think this is particularly important for businesses as they start to push forward and may expand their workforce in the future. In terms of legislation, the Financial Provisions COVID-19 No. 2 Act is the one that's providing the legislative reference for this, and as Karen has mentioned, we're expecting guidance from Revenue shortly on all of this. So in terms then of, what is an eligible employer? So again, similar to the TWSS, in order to be eligible to avail of the scheme, there's certain conditions that the employer must be able to demonstrate to the satisfaction of revenue. They're a little bit different from what was there with the TWSS. And I suppose in a nutshell, there's two main qualifying conditions. The first being that your business had to be significantly disrupted by reason of COVID-19. And secondly, that you can demonstrate at least a 30% decline in either turnover or customer orders in the 6-month period from 1 July to 31 December 2020 as compared with the same period last year. And as we understand it currently, and again this is subject to confirmation, but we understand that this will be on a cumulative basis. In terms of cases where a business did not operate for the full of the corresponding period, so wasn't in operation from 1 July 19 to 31 December 19, there's a couple of provisions included in the Act which are as follows: that effectively if the business commenced before the 1st of November 19, so say for example you commenced to trade on the 1st of September, the period 1 September 19 to 31 December 19 becomes your reference period, and your reference over the same period for 2020. Similarly, if you have business operations that commenced after 1 November 2019, the employer then must be able to show that the turnover or orders during the period from 1 July to 31 December 2020 was down by at least 30% on what would have been expected had there been no COVID-19 disruption. So a further eligibility criteria with the EWSS is that employers must hold a current tax clearance certificate throughout the eligible period. So that is the period from 1 July 2020 to 31 March 2021. So again, it's something that you should ensure that you have your valid tax clearance certificates for all tax heads if you are considering availing of the scheme. And furthermore, as Karen has mentioned, in order to continue to be eligible for the scheme, it's important that you remain tax compliant throughout the duration of the scheme, and that you ensure that all current taxes are kept up to date from a filing perspective. So from the employee's perspective, again, anybody who was considered to be an eligible employee under the TWSS is eligible to be an employee under the EWSS. In terms of individuals who may not have been on the TWSS, they can, if they're on employer's payroll from 1 July 2020 to 31 March 2021, they will also be regarded as an eligible employee. And as Karen mentioned, it also has extended the eligibility criteria to seasonal workers and new hires, and this is particularly welcome in certain sectors of the economy. Karen already mentioned this, but employers who were not eligible for the TWSS or who had employees not eligible for the TWSS can claim the EWSS in respect of these employees from 1 July. If they had employees who were on the TWSS, they continue on the TWSS for those employees until the 1st of September. So effectively you'll be running two systems in tandem. And in terms of the new additions where you'll be putting them in under the EWSS, we will have to do a step back mechanism whereby you will get once the technology is available from revenue side to process the payment, you will get that payment in September. So in terms of exclusions from the subsidy, the new subsidy from an eligible employee perspective, there's two exclusions currently noted in the draft legislation. And in first instance, the Minister of Finance has requested a review on this particular one, so we may see this being reversed, but as it stands at the moment, where an employer is a company with proprietary directors, so that is directors holding 15% or more of the ordinary share capital of the company, they are automatically excluded. And secondly, any person who's connected with the employer who was not on the employer's payroll or didn't receive any payroll payment at any time from the period 1 July 2019 to 30 June 2020, they are also excluded. In terms of application for the scheme, again, you're going to apply to revenue for the scheme through Ross, and they are currently updating the e-registration system to facilitate these registrations, and we expect that this will be live by the end of August. Similar to the TWSS, you will be making self-declaration as an employer that you've met all of the qualifying conditions of the scheme, and that will also be part of the registration process. And in order to be able to complete that registration process, it will be necessary for you to hold a valid tax clearance certificate. So in terms of the subsidy, unlike the TWSS where there was various different rates depending on percentages of pay, etc., this is a flat rate subsidy. So it's basically been paid as a per head subsidy on a flat rate basis determined by the gross pay of each employee. So if you have an employee earning less than €151 per week or greater than €1,462 per week, you will not be eligible to receive a subsidy for that person. However, if your employee receives between €151.50 and €202.99 per week, you'll get a flat rate subsidy of €151.50 for that individual. And if they are earning between €203 and €1,462 per week, the flat rate subsidy available will be €203. So in terms of the subsidy for new hires and for seasonal workers, as Karen mentioned, you can backdate the support to the 1st of July. And once the revenue system is set up to accept applications through the EWSS, this will be possible to do that. So you effectively at the moment will be processing any new hires as a general A1 class employee, and will do the correction once the system is live. And payments for July and August will be made then by mid-September by revenue once the system has been processed. As we mentioned already, there's guidance notes expected on all aspects of this scheme, but in particular around the new hires and seasonal workers. So in terms of scheme operation, obviously revenue are still working through the mechanics of that, and they're working very closely with payroll operators also to ensure that the payroll software is geared up to deal with the new EWSS scheme. So slightly different to the TWSS, effectively here the employer will continue to pay the employee their normal wages. They will tax them as normal in real time, so deducting the normal PAYE, PRSI and USC as appropriate. And revenue then will pay the subsidy on a flat rate basis by an EFT directly to the employer in respect of each eligible employee following the submission of that payroll return. So effectively it should be an easier system you would expect to manage, but again, once we see it operating in real time, we'll be clearer on all of that. In terms of employers' PRSI, and I think this is quite a welcome addition to the scheme, the employer's PRSI for any employee included on the subsidy will remain at 0.5%. So there's obviously quite a generous saving there for employers on the employer PRSI side of things. There's two anti-avoidance provisions mentioned in the Act which are seeking to counteract contrived situations, and the first one is a situation where gross pay due to an employee has been deferred, suspended, increased or decreased with a view to securing the wage subsidy. So it is not aimed at cases where there is a genuine reduction in salary, which is a definite and confirmed one going forward, but it's more a deferral. And secondly, situations where an employee has been laid off and removed from payroll and replaced with 2 or more employees. So possibly if you had an employee whose gross income was greater than 1,462 per week, laying that person off and replacing them with 2 employees to come within the scheme, that will also not qualify. And revenue will, if they identify such cases, will treat the employer as never having been eligible for the scheme, and any subsidy payments received would need to be refunded together with potential interest and penalties. So just a couple of other features to note on the EWSS, and as we've mentioned a couple of times at this stage throughout the presentation, obviously the guidance notes, once we have them, will probably answer a lot of our general questions on the scheme and will give us a little bit more clarity on the operation of it. But in terms of eligibility criteria, the employer is obliged at the end of each month from August 2020 to February 2021 to review their eligibility criteria. And if as a result of that review, an employer is clear that they no longer qualify or that they're not going to meet that eligibility criteria, they need to withdraw from the scheme on the first day of the following month. So if, for example, an employer at the end of or mid-September realised that they were not going to be eligible, they should withdraw from that scheme from the 1st of October onwards. And as Karen has already mentioned, the names and addresses of all employers operating the scheme will be published on Revenue's website, as it was the case with the TWSS. And this will happen between January 2021 and April 2021. So just very briefly, I suppose the interaction and the relevant dates here, the interaction between the EWSS and the TWSS. So for July and August 2020, both schemes will run together in tandem. As we've already mentioned, if you already have staff on the TWSS, they remain on that scheme, and it's only any additional people who didn't qualify for the TWSS or new hires that you will put on the EWSS until the end of August. As Karen mentioned during her own presentation, as with effect from the 31st July 2020, no new applications will be accepted by Revenue for the TWSS, and the TWSS will cease in full from the 31st of August 2020 to be replaced by the EWSS from 1 September. And the EWSS end date is currently the 31st of March 2021. So just one important point to note is that an employer cannot claim EWSS in July or August for an employee if that employee was eligible for the TWSS, irrespective of whether it was claimed for them in July or August. So if you have an employee who could have been on the TWSS, was not on that scheme for whatever reason, you cannot claim EWSS for that individual. So that is just a very brief overview of the details we have to date. As Karen mentioned, the legislation was just signed last weekend on the 1st of August. So we're still waiting for clarification on a couple of points, and the intention will be to do a follow-up webinar with Revenue once we have more clarity and we have those guidance notes to hand. So I'm going to open it up to questions. I see there's a few questions that's come in here, so if anybody else would like to send in questions, please do so. So I'll read out the first question here. Is, we had a part-time student employee who we let go in mid-March. He was on the pandemic unemployment benefit. He has now obtained his degree and we propose to employ him on a full-time basis under a new contract. Will this new employment be eligible under the EWSS? I might pass that over to Garose maybe.
How you doing, folks? Thanks for this. I just have a read of that now. So it's part-time student, and they want to, this is the part-time student, and they want to employ him on a full-time basis under a new contract. Is that correct?
That seems to be the question, yeah.
Yeah. Actually, that's one, probably Anne is probably the best one there. I'm only reading these now. Anne, who's more knowledgeable on the employer. Sorry about that, Anne.
I suppose it really depends on whether he's a rehire, or as in he would have been eligible for TWSS under the rehire, or whether he is a total new employee. So it depends on the specifics of the case. It's not something that can actually be answered in general. If he would have qualified for TWSS, if with, let's say, the EWSS hadn't come in and TWSS was there, and he could have, he'd have got an ARNWP because he would have been employed in January and February, then EWSS can't be claimed for him until the 1st of September. So like I say, it's not an easy one. It's something that will just have to be looked at on a specific case-by-case basis.
Okay, thanks, Anne. And the next question, if we come off the TWSS this month, returning to normal as of September, can we expect that tax refunds owed by employees won't come into effect for employees until next year? Karen, I might pass that to you. You've already, I think, addressed it, but just, if you want to just...
I'll take that one for you if that's okay. Basically, anyone who was on the temporary wage subsidy scheme or was on pandemic unemployment payment, all of those are taxable subsidies or benefits. And at the time, in order to keep people at home during the lockdown situation, it was decided that we wouldn't tax these in real time, but that we would do it as an end-of-year basis. So what's happening now is that we're collating all the information we can, and that's part of the reconciliation process. Is to get all the information as to what actually employees were paid in subsidies. We'll accumulate all of that together, and at the end of the year, which means that we'll have a busy period coming out around Christmas and up to the 15th of January, we'll be calculating basically people's liabilities in respect of the temporary wage subsidy that received. where there are underpayments, as there will be some people will have underpayments, that will be available for people to see. We'll be asking to make income tax returns. They may have other expenses to reduce those underpayments or even to negate them down to zero, such as health expenses, nursing home expenses, tuition fees, things like that. And other credits and exemptions that they can claim. In those cases where there are still underpayments, the underpayment will be coded forward into 2022, starting 2022. So we won't actually be making any requests to recoup any of the underpayment in 2021. It's normal practice we do this, so it's nothing unusual that. So we'll be actually coding the underpayment forward into 2022, unless people want to pay us directly, in which case they can do that, and we'll have a process in place for people to pay us directly a full or partial amount of money.
Thanks, Grove. Next question then, will staff payslips from September have no reference to COVID-19? This has caused issues for some looking to apply for mortgages.
Yeah, I'll take that one again, Emer. Again, we're just working out the mechanics, particularly with payroll software developers, as to what will show on the payslips.
Okay, thanks.
So that will be covered in the guidelines.
Great, thank you. Next question here. We're already on the TWSS and not planning to avail of the EWSS until September. If our combined turnover for July and August is not 30% on the prior year's July and August, can we register and claim the EWSS if we believe our turnover for the whole 6 months will be down 30%, or will we have to wait until we meet the criteria to register?
No, you actually look at it on a 6-month basis. So you do an assessment when you're joining as to whether you expect the turnover for July to December 2020 to be down 30% on July to December 2019. So it's not on a month-by-month basis, it's on the full 6 months. And that's why you need to do the assessment at the end of every month, because you might end up with a month much higher than you expected, with an expectation then that the following months would be similar, so that you wouldn't actually be down 30%, whereas when you entered it, you would have expected to be down 30%.
Great. And then if you meet the 30% reduction mark, is the financial health of your company relevant? So I suppose this brings us back to the commentary that was around the TWSS around the cash reserves point. It's
30% turnover reduction is what the test actually is.
Yeah, so there's no reference to cash.
Apologies.
Reserves.
No reference to cash, it's turnover or orders. Apologies, that's got the order bit.
If an employee is a gross gross basic pay of 1,400 plus BIK of 200, does this mean that they exceed the 1,462 limit and don't get any EWSS?
Yes, that's correct, because it's gross pay, which includes any notional pay, and it's before deduction for pension and things like salary sacrifice. Okay. So that's correct.
Next question, is there any insights from revenue on the categories of employees or employers expected to be excluded from EWSS when future guidance is released?
Again, it depends on each person's turnover as to whether they're going to be out. We haven't, our guidance won't be specifically excluding particular sectors, because you know, individual entities in a particular sector might be affected more than other entities in a particular sector. So it's not something that will be included in the guidelines. Okay.
If an employee was promoted and salary increased in March with the TWS, they were no longer eligible and lost the subsidy, would they be eligible to receive the EWS as their pay is now below 1,462 per week?
The problem is that they have an ARNWP, so they are effectively eligible for TWSS. It's just that their wages are higher than the ARNWP, so they're not entitled to be included in the EWSS until the 1st of September.
That's great, thanks, Anne. If a business does a review to say the end of August, I think that's similar, we've already dealt with that question. Will the employee be able to get details of how much his employer has claimed for him? Would this be on my account, for example? The fear of employees how much tax they will owe. I'm not sure if that's regarding the WIS.
I'll take that. Thanks, Anne. And Emer. Well, in this case, they're already able to see it through my account. Part of the POI modernisation, which we brought in January 2019, allowed employees to see all of the payroll submissions in respect of them of each employee that their employers have been submitting on their behalf. So they can log on to my account and see exactly what has been paid, has been reported as being paid for them. And in amongst that is part of the, will show the COVID-19 TWSS payment as reported to us. Bearing in mind that we'll be getting additional information as part of the reconciliation process from employers and the payroll operators, and as we get that information, we'll be populating each individual's My Account so they can see that. At the end of the year, then we'll be doing our calculations and everybody will be able to see exactly what that calculation is, again through My Account.
Okay, next question here then. Can an employer go in and out of the EWSS if their turnover exceeds on a cumulative basis the threshold and in later periods falls below it?
This is something that seems to be causing some difficulty. I think you don't look at it month on month. You look at the full 6 months and you look at the expectation for the 6 months. So at the end of September, you don't just look at July, August, September. You look at July, August, September plus your expectation for October, November, December. So it's still, you look at the full 6 months. If at that stage you decide, looking at the first 3 months and your expectation for the next 3 months, that you're not going to be eligible, then you opt out. You can do an assessment again at the end of October, and if you see at that stage that October wasn't as high as you expected it to be in November, December is expected to be lower, you can opt back in. So you can opt in and out, but you have to deregister and re-register.
Okay. We run a bi-weekly payroll and apply the TWSS. Pay period 10th of August to 23rd August will be paid on the 28th of August. The next pay period is 24th August to 6th September, being paid on the 11th of September. How should we apply TWSS for the payment on the 11th of September as the pay period overlaps with the end date of the TWSS?
That's something that we're looking at the moment to provide guidance on if people want to move from TWSS to WSS. If they're only staying in the TWSS and the pay period is and the pay date is in September, then it'll be out of the temporary wage subsidy scheme.
Great, thanks.
Because we're based on pay periods.
Yeah, and we're similar in EWSS.
Or pay dates. Sorry, we're based on pay dates. Yeah.
Okay. Where an individual is both self-employed, e.g. a farmer, and an employee's employer availed the TWSS, will the underpayment of PAYE USC be payable in their 2020 income tax return due in October 2021?
Let me see now, where an individual where a person is an employee and received a temporary wage subsidy, the underpayment or any liabilities of PAYE in USC from their 2020 income tax will be either paid in 2021 if they want to pay us fully or partially, and the remainder will be taken out in 2022, depending on the level of liability for between 2022 and 2026.
Okay. For EWSS, for the €203 per week per employee, we should previously monthly paid staff be moved to weekly payroll, preferable maybe.
I'm sorry, can you read that again, Emer?
Sorry, it says for EWSS, for the €203 per week per employee, so the subsidy of 203, should previously monthly paid staff be moved to weekly payroll?
We will do a calculation within our systems, converting monthly payroll into weekly calculations. We'll be setting out in the guidelines how we'll calculate that, but we can accept and deal with any payroll frequencies from monthly, at least monthly, so it'll include fortnightly and weekly, but anything like quarterly or half yearly or yearly, we won't be able to deal with on the EWSS system.
Perfect. Can I clarify if the employer will be required to pay the employee their normal wages, i.e. not a reduced wage? Can an employer cut employees' hours as EWSS is not as large as TWSS?
That EWSS is, we just don't get involved in anything like that around, the relationship between employer and employee and pay and all that is totally separate.
It's more of an employment law issue really there,
yeah.
I think,
yes.
Tax issue. Yeah. If a person employed in two businesses, they're paid $250 gross in each employment, will they get the 203 subsidy for each employment?
Again, that's
sorry, can I interrupt? Yeah,
sure.
Can I interrupt there in this one? it's the employee doesn't get the money.
Oh, you're right.
It's the employer.
Yeah.
And just looking at some of these questions, people think the employee is getting the subsidy. It's the employer gets the subsidy when it's the employer subsidy system.
And I suppose that's the fundamental difference really, girls, between this system and the TWSS, in the sense that employees here are getting paid their normal wages per their employment contract, and if they fall within the qualification criteria, the employer gets the subsidy for them. I think that's really a key
that's an absolute key change in the way we're looking forward. So sorry to interrupt you there, Anne.
Not at all.
You're okay. And it does mean that, you know, tax, USC and PRSI will be collected on a weekly or monthly basis, you know, in every pay period.
On a normal basis, yes.
On a normal basis.
Yeah.
So.
Question here, if a business starts trading in March, I presume March 2020, when will they be able to apply for the EWSS?
They will, provided all the eligibility criteria is met, they'll probably qualify for the July-August sweepback, which means they'll should get something in September, because their eligibility criteria will be based on their projected, if there wasn't COVID, as against what they project now that we are in the midst of the pandemic.
Okay. Another question here, I think anyway, in 2019, a business had closed, or production and fittings were presumes turnover were decreased because of the business closing for a period of the month because of builders' holidays. This year we're working straight through due to trying to catch up because of COVID. Doing this, we actually expect a rise in trade in the month of August. Wondering if, in regards to applying for the EWSS, can we use this change the factor for qualifying? I presume that you're still caught within 30% reduction, and they're over the 6-month period on a cumulative basis.
Correct.
Yeah. That's fine. Substitute. Yeah. So I suppose with the EWSS, the difference between it and the TWS is that you're taxing in real time based on the wages being paid. So it's not any retrospective taxing like we're going to have with the TWS, as we've mentioned already. Initially, the eligibility for the TWSS was on 25% reduction in revenue. Has the emphasis now moved to cash flow?
No, it's still on. No, it's still on revenue, still on the 25% reduction in turnover or orders. That's still the criteria.
Okay. There's a question here on debt warehousing, which we might need to defer to another session. Read the debt warehousing scheme is VAT due for revenue. Is VAT due to revenue for January, February 2020, and PAYE due for February included? Yes, under the scheme, that is what's provided. It's the debt that will have accrued for both VAT and PAYE from the shutdown of the economy. So in the case of VAT, it's January, and in the case of PAYE, it's February, and then it's up to the point that you restart your business or reopen your business. Again, there'll be more guidance coming out on the debt warehousing. How does EWSS affect employees who are temporarily laid off?
Again, you're back to not affecting employees. It's the employer claims it. So if the employer isn't paying them, he's not claiming EWSS in respect of them.
And a business claim EWSS as only starting in business in August 2020.
I think we've kind of already looked at that. It's the case of how will the employers get the reduced rate of PRSI? I presume that will be in file in the payroll. Once we'll probably have a little bit more clarity on that when we see the guidance notes. Absolutely, we're still working our way through.
We have to do it. We have to do a bit of do a bit of processing to do that.
Fine. A question here around the eligibility and the valid tax clearance cert. One of the criteria to be eligible is that you have valid tax clearance cert. Do all liabilities have to be paid, or just the returns filed?
If they're not paid, you have to be in some kind of a payment arrangement, and there's additional details around additional payment arrangements and reduced rate of interest as a part of the July stimulus package. So I would ask and encourage anybody who's expecting to avail of EWSS to actually start engaging with Collector Generals as of now, so that you are in a position to obtain a tax clearance cert electronically online. And that involves just engaging with them and availing of the supports that have been put in place as a result of the July stimulus package.
Great. Question here then, can an employer pay a Christmas bonus or catch-up gross pay amount in December and still claim EWSS for that month? I presume we're still bound by the 1462 upper limit for the subsidy on that one.
You are, but I would be a bit concerned about the catch-up gross pay as well.
Yeah.
That sounds like you're deferring some of the payment, which
Yeah.
is one of the criteria that you're not supposed to do, and one of the specific anti-avoidance provisions that are included in the legislation.
Okay. Salaried staff are losing out versus hourly pay due to subsidy not being taxed. Salaried workers getting less when eventually tax was. I'm not sure of the question there. Sorry. I want to send it in by email separately. You can do. Why are there only 2 bands for EWSS? I presume that's just a legislative thing. It's nothing revenue of any control over. That was what's in the legislation.
No, yeah, that's correct. I think if we put in 10 bands, people might be upset because it complicates it as well. In some respects, 2 bands is nearly easier.
Absolutely. On the debt warehousing, where the POA is paid on a 3-month basis, January to March, does this include January 2020?
We'll have to cover that in a different session.
I think so too. Large tax bill for employees. I think we'll cover that off on the TWSS. There's a couple of other questions in the chat. If we just have 1 or 2 more here, I think we might have covered some of them. If an employee was laid off and claiming the PUP, if the employer has been availing of the TWSS, can they bring back that employee onto payroll, pay them under the TWSS until the end of August and keep them on layoff? Or does rehire mean that the employee must be brought back to work?
Can you read that out to me again, please?
Yes, if an employee was laid off and claiming the PUP, and the employer is now availing of the TWSS, I presume in respect of other employees, can they bring that employee back onto payroll, pay them under the TWSS until the end of August, but keep them on a layoff, as in that they're at home? Or does the rehire mean the employee must be brought back to work? Physically, I presume.
The terms of the TWSS are that you can rehire somebody, but in rehiring them, you're bringing them back on the payroll. Which you can do. Whether you actually provide work for that person, that's a matter between you and themselves. But all we're looking for under TWSS on the temporary wage subsidy is that people can be temporarily laid off and still on payroll. So it's a matter of, are you paying them or are you not?
Another question here then. An employer was closed during lockdown and suffered losses in Q2. Employees claimed I presume it should be PUP. The employer has reopened and its turnover is less than the prior year, but not lower than by 20%. Criteria to qualify TWSS is by reference to Q2 sales. Some such employers are now making a profit, can pay full wages. Can such employers claim TWSS? They had no sales in Q2. So I think the question here is, as you've mentioned already, Karen, in your presentation, we're still looking at Q2 sales. So then they've gone in this question to say, what is the revenue view taking into account revenue comment in March, April, we having cash reserves? And the example given is hairdressers or dentists.
It's a very complex question. Just to summarize it, the way I see that particular question is, somebody was closed down, they're now reopened, they're not operating the subsidy at all at the moment. If they're not operating the subsidy, then that's the temporary subsidy, then they can't start the temporary subsidy now. That window is closed. We're not allowing new employers to join the scheme. If they were in the subsidy before the 1st of August, they need to have a serious look at their criteria. The criteria we're looking at was 25% loss of turnover or customer orders in Q2. If they have that loss in Q2, they can continue on operating the subsidy for their people up until the end of August. If they didn't have that loss in Q2 or that significant economic impact of 25% in Q2, then we strongly suggest them that they do not operate the subsidy, that they stop operating it and they stop claiming it.
Okay, I'm just trying to see if there's anything else we haven't touched on. There's a couple of questions that are there, but they're kind of duplicated on what we've already answered, I think. I'm not sure it's saying that again, it's kind of coming down to the employer versus the employee. So again, it is a subsidy paid to the employee, or sorry, to the employer. The employee is paid their normal gross pay by their employer and taxed in real time. So I think we've covered that. I'm just trying to see if there's any other questions there. If there are any other questions that we haven't gotten to, sorry, there's one question here. I had 2 letters, I presume the 5-day TWSS letters last week. We 2 different clients replied to both last Friday. First reply was answered within the hour. The second, I still have not received a reply. I presume that just comes down to different caseworkers and case loads with respective caseworkers.
Absolutely.
Oh yeah,
and
yeah, absolutely.
You're into summer leave as well.
Yeah,
you know,
exactly.
I mean,
So
I think
apologies
if
they didn't get the response, you know, sorry, yeah, but we have significant response times, but they will change. The complexity of what was given back, the area, in other words, the division responsible, because some of the employers may be more complex than others.
Okay, there's just one question here. Can you define resumption of trade for where warehouse we've mentioned will be the subject of another panel discussion beyond the scope today. So we'll come back on that one. I think a lot of the other questions we've probably touched on them already, but if there's specific answers that people haven't received from the Q&A, as I said, please feel free to drop us an email and we can get those sent across to Garode and Karen and Anne and Laura. I don't know if there's anything else on those there that we haven't touched on. Okay, so listen, I just want to thank Garode and Karen, Anne and Laura again for their time, and thank you all for joining us this afternoon. Hope you found that of use, and as we said, that we will be planning to do in early September a further update when we have more details on the EWSS. The recording, as we said, will be available, and we will send this out after the session. Thank you so much.